Saurabh Mukherjea joins us now. Let's connect with him. Let's understand his understanding of the market. When we spoke to him last, he did share with us that he's aggressively using the market decline to his advantage to add more stocks. Saurabh, good morning. Thank you for joining us. Let's start with your market view. It's been a good comeback for the market. All the concerns, one by one, they're getting addressed now.
I would say as much as with Nikunj. I think I remember a couple of very sort of grim interviews you and I did 2 or 3 months ago, where I think you were asking me, and I was sort of confirming the fact that life was difficult for investors in the Indian market, like myself. But I think the last couple of months, the peaking out of inflation globally, both in the West and in India, inflation does seem to have peaked. The fact that the interest rate cycle globally also seems to have peaked, the return of foreign investors, and all of that combined with solid macro and stock-specific news flow. Right, whether you look at doubling of power demand in India over the last 5 years, solid numbers from in terms of cement volumes, credit offtake, and sparkling numbers from say an HDFC Bank or a Bajaj Finance in terms of loan growth. I thought TCS's numbers actually were very, very impressive. So big companies reporting solid numbers, good macro, good inflows from foreigners coming through. I would say this is the best situation I have seen for Indian investors for a long, long time.
I was just looking at data. Asian Paints is saying that they are getting into waterproofing. Pidilite is saying that we are getting into paint companies. And I'm confused here. Pidilite is challenging Asian Paints. Asian Paints is challenging Pidilite. Who will get it right? Who will get it wrong? Both are your portfolio companies.
So I think one challenge there, I would say, is Pidilite has lots of ex-Asian people in it. And these are all very competitive, very bright, driven executives. So there's a little bit of it's an old boys club fighting it out with each other. But on a more serious note, Asian Paints' waterproofing is for the inside of the building. Pidilite's waterproofing, primarily Dr. Fixit, is for the outside of the building. So whilst it feels like it's two giants punching it out in waterproofing, in reality, the core markets that the two firms are targeting in waterproofing are quite different. The head-to-head competition actually is quite limited. These companies are, I think, too smart to go head-to-head at any serious level. There is a little bit of don't come into my turf. If you come into my turf, I'll go into your turf. At the simplest level, think of Asian Paints as waterproofing for inside your house, inside your bathroom, and Pidilite as the waterproofing for the outside, the exterior of the building.
Saurabh, there is a renewed concern about IT. Now, I remember we were using words like a cloud lake is getting created, the cloud architecture which is getting created in US is going to be a multi-year process. But when I look at numbers from TCS or the commentary from Infosys, it has changed in between quarters. So while the big picture argument is that the relevance and the importance would be there, but in the near term, when you see so much of volatility in IT, it just makes you wonder that is that the right sector to bet on?
So if we come back to sort of considering the situation in TCS's results, not only are they reporting operating margins of around 25%, actually operating margins 25%. The input cost pressures there, the wage inflation pressures that we were seeing last year are gone. You're seeing YOY top line and bottom line, YOY and local currency doing around 15-16%. But most importantly, Nikunj, you're doing, I think, around $10 billion of deal wins. And more generally, if I look across the IT services industry, the deal wins number, deal activity is actually quite solid. What these companies are rightfully doing is they're telling you that, look, 4 banks have gone bust in the Western world in the last month. And naturally, therefore, Western CEOs are circumspect about what they're going to do in the next couple of years. And these are high quality, honest companies. I think TCS and I also reckon Infosys has similar sort of DNA. These are high quality, honest companies, and they're tempering down expectations of the future. You and I all just have to use our common sense and say, if we expect Western banks to keep bust ad infinitum, then obviously life gets difficult for the Indian IT services companies. But I don't think the Western bankruptcy situation for big banks is a permanent situation. Once the Fed starts cooling off rates, the whole mark to market around their bond portfolios fades away, and the long term trajectory that we have seen from TCS, Infosys, I think we get back to that. So the migration to clouds isn't even 1/3 done for the Western world. their issues, the big global companies' issues with IT staff shortages continue. And I honestly don't see why people get so worked up about quarter to quarter guidance from companies that have proven themselves over 20, 30 years. You got structural trends with clean companies, well-run companies. Go forth, stay invested and make money for him. Consistent compounder stays a big position. Quick disclaimer, all of these companies, I own them through Marcellus. My parents own them through Marcellus. And more than 1,000 clients own them. And we have fairly substantial positions in all the companies that I'm discussing.
Saurabh, hi, morning. Intrigued to know whether there are any new entrants to the rising giant portfolio. That's where I see the most interesting and upcoming names.
Right. So no, we haven't added much. We're just concentrating on bulking up further. So Divi's Lab used to be only in CCP, in consistent compounders, our large cap portfolio. As I think everybody in the country knows, Divi's Lab halved last year. So through November, December last year, we increased the position in Divi's Lab very substantially in the flagship portfolio, CCP. But we also added Divi's Lab Aisha. We also added Divi's Lab to Rising Giants. Rising Giants focuses on companies with $3, $4, $5 billion market cap. And thankfully for our Rising Giants client, Divi's fell so much through last year that it became a mid cap and we added Divi's to Rising Giants. Barring that, the only other addition has been in our small cap Kings of Capital portfolio, which is a financials portfolio where we added Prudent Corporate, which is a company which provides a platform to mutual fund distributors and people who sell insurance policies to the mass affluent. I think there are around 25,000 mutual fund distributors and insurance salespeople on their platform. And we think Prudent Corporate is a straightforward play on the financialization of savings, not just at the sort of ET now viewers level, but also at, say, the more modest strata of Indian society where people are trying to save 2, 3, 4 lakhs a year through either mutual funds or through life insurance.
Saurabh, hi, morning. Let's also discuss some of the interesting mid-small cap names that you've got in the Little Champs portfolio. Moltec, Pack, Poshak, Tarsen, GMM, Fodler. What's the outlook? And if you could just revisit some of these stocks.
So let's just go quickly then. So Moltec Packaging, leader in mold packaging. In mold packaging is the sort of packaging you see in high-end FMCG products, quality walls, ice cream bucket. So Asian Paints, Berger Paints use in mold packaging in their more premium paint offerings. And naturally, therefore, as the paint industry grows, as the premium end of FMCG grows, Moltec Packaging is setting up plants alongside the big paint and big FMCG giants. So they have a niche in this. They're a leader in this. There's a specific technology advantage that they possess in mold packaging. We've interacted extensively with the management since we first bought a stake 4 years ago. We've seen the management raise its game on capital allocation, improve the technology, and we remain very convinced that there's a long-term future for this very interesting small cap company. Poshak is a dominant player in phosgene. So phosgene is an essential industrial chemical, as essential as chlorine. Because this was the chemical at the heart of the Bhopal gas tragedy 40 years ago, it's a controlled substance. The government does not give out new licenses to make phosgene. Poshak, therefore, is a quasi-monopoly. It tripled capacity through 2021. It tripled capacity through those years. And we bought it once we had visibility that the ROCs, the return on capital, had been slowed, had been compressed by the tripling of capacity. And we remain optimistic that as we come out of COVID, as the economy recovers, the incremental demand for phosgene will be met by Poshak. Barring Poshak, the only other large manufacturer of phosgene is a PSU, where I don't think the competition is going to be credible or sustainable in terms of a Poshak versus PSU situation. And the third company, was it GMM Fodler that you mentioned?
Fodler.
What was the third company, GMM Fodler?
Yes, GMM Fodler, that's right.
Yeah. So just also GMM Fodler, the order books in domestic glass-lined reactors remain full from everything that we are hearing. So we got several of GMM's clients in our portfolio. So we keep talking to GMM's clients, and from everything that we are hearing from Baroda, from Vapi, from Hyderabad, the domestic demand for glass-lined reactors, these are ceramic reactors within which pharmaceutical products are made. The domestic demand is strong. 55% market share globally for GMM glass-lined reactors. That part of the business remains strong, or profit compounding driven by the glass line reactor piece, I reckon will remain very healthy. The piece that we're doing more work on is the non-glass line piece. As GM Zucam now are basically a multinational, I would say half of their profits now come from non-glass line reactors. We think revenue momentum is good there, but we're trying to figure out how much of a dominance, what is the strength of the competitive moat here. But if you ask me what's the profit outlook here, I reckon that remains very buoyant, as it has been, to give GMM credit, as it has been for the last 3 years. I think the world is shifting away from China towards making pharma and specialty chemicals in countries like India, and GMM remains a play on that.
What's most interesting, Saurabh, actually is your global compounder portfolio. And while, of course, there are obvious names like a Microsoft and Berkshire Hathaway, that let's not touch upon. But Intuitive, which is actually a medical equipment company, Hermes, I mean, clearly all the data points seem to be indicating that luxury market is not seeing any slowdown. And then tell me more about Ashlead and Hiko.
Right. So let me just cover up Intuitive. So actually the idea for this came from, our domestic flights. So whichever airport we would land in, right? When you leave an airport, maybe Delhi airport or Bangalore airport, you will see big signs saying, this is the hospital you need to visit in Delhi or in Bangalore for robotic surgery. So we came back to the office and we realized that robotic surgery now accounts for something like 80-90% of the operations that are performed in hospitals such as in Delhi, Bangalore, and indeed in the Western world. And believe it or not, market share for Intuitive in robotic surgery globally, market share is north of 50%. This is the dominant maker of robots that are used in soft tissue surgery. They have a moat around the fact that once a doctor starts using Intuitive's machines, the machine is called Da Vinci. Once a doctor starts using Intuitive's machines at the age of, say, early 31, 32, 33, it becomes very difficult for the doctor to change the robot, right? The older you get as a doctor, the more dependent you get on Da Vinci, and that gives Intuitive a very solid moat. Even if the doctor changes hospitals, changes jobs, he wants Da Vinci wherever he or she goes. And that's why we loaded up on Intuitive in global compounders. And as you said, as we get older, richer, as rich people globally get older, the addressable market for something like robotic surgery will only expand. And just on that note as well, Aisha, Hermes, we reckon is a similar play. The count of dollar millionaires is an unbelievable number. Millionaire, the annual count is growing at 6-7%. And the number of dollar millionaires. And as I'm sure many ET Now viewers will appreciate, especially of the fairer sex, dollar millionaires want Birkin bags. Hermes, by definition, is the monopoly provider of Birkin bags. That drives 70-80% of its profitability. And these handbags at $20,000, $50,000 become that much more desirable as the rich keep getting richer globally. So Intuitive and Hermes, very different companies, but both are plays on the global super rich and incredibly moated companies.
And she's saying Saurabh Mukherjea understands what women want. Is she getting a bag Saturday or like a next anniversary gift? Will it be in Hermes?
So is yours, by
I
the
can't
way.
afford it.
So
The qualification here is old and rich people. I'm getting old, but I'm not getting rich. So for me, I don't qualify the cut. Saurabh Mukherjea.
At the moment, I'm telling my better half to look at Titan. Titan is part of the founders. We're very happy with Titan.
But that's jewelry, my friend. That's even more dangerous path you've started to go on. Tanishq is more expensive than Hermes bag. Saurabh Mukherjea, you're walking on a dangerous path.
So Hermes is a
I'm
very
sending
clever
this clip to
company.
your wife, Saurabh. I am sending this clip. Producer, please mark the time, 9:32. I'll send her the text that you're promising her some Tanishq jewelry.
Thank you very much.
Yes, Tanishq, Saurabh.
Yes, so we're coming back to that. Tanishq is a play on Titan rather is a play on the same dynamic in India. And as we can see year upon year, the sorts of people who watch ET Now, their salaries are going up, their bonuses are going up, their business opportunities available for them are going up. And naturally, therefore, Titan is driving 25% free cash flow compounding year upon year on the back of that. What's even more interesting, I thought, was how last 5-6 years, Titan has turned Carrot Lane into a very profitable e-commerce proposition, growing at 50%, right? So Carrot Lane makes money, real cash flow, real EBITDA, and it grows at 50-55% year after year. And Carrot Lane caters not so much to my better half, more to say my daughter's generation of women, people who are beginning their jewelry buying journey, buying say jewelry for 15,000, 20,000 rupees, and doing so online. So both the 80,000 rupees per item jewelry and the 20,000 rupees, Titan has basically created a cradle to grave jewelry proposition for affluent Indian women who are going to work earning money. And it's difficult to see which local jeweler can take this company on. I think at a PAT level, EBITDA or PAT level, Titan makes 4x the profits of its nearest competitor. And each year, I reckon that gap is widening. So as a play on Indian affluence, difficult to see of more. In the last 20 years, Titan has created 1200x shareholder wealth. Even I fell off my chair when I realized that. So 1200x shareholder wealth, cash flows, free cash flows would have gone up 200 to 50x, but unbelievable creation of wealth by this company from Bangalore.
All right, Saurabh Mukherjea, it was great to have you. Learned a lot about Hermes and handbags. Thank you very much for enlightening me, at least on that front. Tanishq, I already
Thank you,
know,
Ed.
but thank you very much.